Hey everybody, welcome to the morning market briefing. It's Thursday, June 30th, 2022. Hope you are doing well. It is Thursday, so that means we're looking for initial jobless claims coming out right now at 8:30. The expectation is for 229,000. The last reading was 229,000. We are refreshing, trying to get that number.
We got it.
Where are we at?
We are in at 231,000. We're still waiting on revisions, but yeah, we're basically right.
Revised up to 233.
Was it? Okay.
So slightly higher than expected, a little bit of a revision. Maybe not a huge shock thematically, given everything we've talked about, though, right?
Yeah, it's moving slowly upward. Again, I think this is one of those things that we're in the 170s and you don't really see much of a change from week to week. In fact, after the revision, it actually seems like the initial jobless claims fell last week. But the thing is, we keep getting revised up and gradually we're picking up in terms of the initial jobless claims. And again, I think this is one of those things where you look back in a month and the 4-week moving average is higher, and that's what we've seen. And that's what I'd continue to expect to see over the next month.
German unemployment jumping pretty significantly.
Yeah, this was an interesting story. I saw the headline. It was up 133,000 job losses over the last month there. The estimate was for a 5,000 job gain. And so you had a lot more what appeared to be job losses, although they did come out and say that a lot of that is due to Ukrainian refugees coming in and joining the labor force and taking unemployment benefits. So it seems like that is the primary factor of why German unemployment is rising. The unemployment rate went up to 5.3% there. Expectation was for it to remain constant at 5%. So you are seeing unemployment rate rise in Europe. I do think some of that's fundamental, but you have the messiness with the Ukrainian refugees, and it's difficult to parse those two out.
On the unemployment side, ADP reworking their formula. Not a surprise there. It's consistently inaccurate. I don't know if anybody cares.
I mean, it'd be a real shame if they, in the months right after the Fed has the most aggressive rate hikes in 30 years, suddenly didn't release an unemployment report. Weird. I wonder who paid them off to do that. It just seems very shady and poorly timed. In my opinion, tinfoil hat Tom here saying they were asked specifically not to release a July number because it's going to be very, very poor. That's my opinion. We'll see. We'll see how the actual, federal government report looks like.
Stay woke on that one, guys.
I'm just saying, because who's manipulating the numbers in July? There's only going to be one number. It's coming from the federal government, which doesn't want a lot of job losses heading into an election. I'm just saying.
Man, kind of makes you think. We do have the big unemployment report next Friday. We'll get ISM manufacturing tomorrow. Ben, big OPEC plus meeting. Obviously, I feel like OPEC meetings tend to move the needle from a narrative perspective in the energy markets at all times. So I think this is especially heightened. What are some of the factors kind of going on, being discussed, looked at?
Yeah, so we just got the news that they did ratify the 648,000 per barrel per day increase, which is about 0.6% of global oil supply. And that's coming for the next month. That was expected. So now we've recovered all of the production that was lost during the pandemic. So now OPEC its quota is that it can produce as much as it did before the pandemic. So that's expected news. I'm not saying it's good news. I'm not saying it's bad news. It just was expected that they would do that. The question now is, what do they do from here? Because now that they're back to where they were pre-pandemic, this was the plan all along, to get back to where they were. The question is, do they keep increasing production from here? And that's a question that Saudi Arabia is going to have to answer. So the way it's structured is you have this joint technical committee that comes out with its estimates for the supply surplus or deficit of oil in any given year. And then they give those recommendations, they give that analysis to the Joint Ministerial Monitoring Committee. That's all chaired by the Saudis. Sometimes it reaches a recommendation, not required to do so, but then they go to the OPEC and then they make the agreement. So really the Saudis are the gatekeepers here. The Joint Technical Committee did come out with its report, and they said that the surplus in global oil markets this year will fall to 1 million barrels per day from 1.4 million barrels per day, largely due to the constraints imposed by sanctions on Russia. My view is that this kind of sets the stage to allow for more OPEC production, because if you see a smaller surplus, that allows you to think that maybe supply and demand is actually a little bit more balanced. You can increase the amount that you're producing a little bit more. So I think they do have some cover to make that recommendation when they meet. The Joint Ministerial Monitoring Committee now has the decision of what are they going to do. Ultimately, I think that whatever OPEC Plus does is going to be principally determined by the meeting with President Biden next month when he meets with the Saudis. It looks like right now, if there is an agreement, it will likely entail an agreement where the U.S. provides additional defense support to help Saudi Arabia contend with the Iranian-backed militias in the region. So it looks like basically an arms for oil deal. U.S. would provide more defense in the Middle East, and the Saudis would pump more oil. The big X factor here, though, is just because you have a quota doesn't mean that every country is going to hit that quota. Already, we're almost 3 million barrels per day below the quota for OPEC Plus. So what this indicates is even if the Saudis say, okay, we can pump more, there's a limit to what they can do. And for that reason, there's also a limit to what President Biden can negotiate. Ultimately, this probably will impact oil markets. The question is to what degree.
It's kind of a weird thing. We talk about this a lot in the investment committee, just the energy space in general. You have things that predictively lead kind of to trends in pricing, but then you also have this kind of like, well, we'll see what happens. And you're very reactive. It's an interesting space. The guns for gas policy, which is kind of a tale as old as time. We'll hopefully continue to see that work. I don't know. I mean,
send them some more chainsaws so they can go after those journalists, those pesky journalists.
I mean,
Tom's on a heater today.
And it does create some weird, some weird things, especially when we haven't talked about it on the show, but with the Live Tour, the PGA competitor, the fact that we're getting really mad at Phil Mickelson
for taking Saudi money,
and then we're gonna take Saudi oil and we're gonna give them more defense and we're gonna pay them money, and it's just, you can't have both ways.
Think of it as Joe Biden negotiating a new contract for Brooks Koepka, and then it'll be, everyone will feel good about it.
Yeah, there we go. We got real off track there. Restoration Hardware. Stop me if you've heard this one before, folks, but cutting guidance.
It's been crazy. I mean,
3 weeks later, 4 weeks later.
And when we talked about it last time, the easiest thing in the world to not buy is a $30,000 couch.
And to their credit, they were calling for this back in March. I remember when they came out with their conference call and the CEO was incredibly pessimistic and saying, hey, you don't know how bad it's going to get. They were one of the first to call it, even before the freight slowdown at the end of March. And I think that's pretty interesting. So I think they do have their finger on the pulse to an extent, but clearly they're fighting from behind right now, because they just revised guidance down to 5% for the year. They, again, less than 30 days ago, they said it was going to be up 0 to 2%. The original guidance was up 5 to 7%. So you take the midpoints of that, you're down about 10% versus where you were originally. But here's where it gets scary. We haven't even seen the negative yet. So they're going to be down 1 to 3% this quarter. That guidance was actually reiterated. Guidance for 2Q was reiterated. It's the second half where it gets really bad. They're expecting to be down 11%. Estimate is up 2%. So this, in dollar terms, you're talking about 1.7 billion. Estimate was 1.95 billion. They say the deteriorating macroeconomic environment has resulted in lower than expected demand since our prior forecast, updating our outlook, particularly for the second half of the year. With mortgage rates double last year's levels, luxury home sales down 18% in the first quarter, and the Federal Reserve's forecast for another 175 basis point increase to the federal funds rate by year end. our expectation is that demand will continue to slow throughout the year. And two, again, Restoration Hardware's credit, they're the one company that's talking about demand.
Yeah.
You hear Target talking about demand shifting, but the consumer is still strong. You hear Walmart talking about that. You even heard Bed Bath & Beyond yesterday somehow talking about the strong consumer. Point is, the consumer is not strong. Restoration Hardware actually gets it. For all their foibles, they actually get it. They're responding to demand. A lot of other companies haven't revised guidance down due to demand yet. It's all been due to costs. If that demand thing falls, then you could see some significant guidance revisions in the second half of the year that get really ugly.
Constellation Brands up quickly after they reported earnings, now actually down 1.5%. I'm not sure if you've been tracking that over the last few minutes. Earnings came in at 266, expectation was 250. They do have Canopy Cannabis brand, and if you took that out, earnings were at 290, so that created a drag, which is probably not really a surprise. Good revenue, beer volume very powerful. Modelo, Ben, you classified Modelo's performance as quote explosive.
Yeah, I mean, they classified that, and I was just like, I can't not avoid copy and pasting that word. Modelo was up 15%, Corona up 4%, Pacifico up 21% with a little bit more brown glass availability. So some of those supply issues that we were having with Constellation, those have normalized a little bit. They didn't really talk about anything negative in demand. So that's good. They reiterated all their guidance for the year. I think the interesting thing right now is the fact that the stock's selling off. It has been a relative outperformer, so it does have some room to give up some. I was impressed by the fact that they were able to hit the numbers, because I thought the estimates were a little bit aggressive from analysts. But nevertheless, I guess the stock down, and that's just kind of the tenor of the market at the moment. And earnings season starts in earnest. We have Micron earnings tonight, but earnings season will begin with the banks in about a couple of weeks, and that's going to be an interesting one. Is that hurricane here, if we're quoting Jamie Dimon?
Yeah, I think it's going to be pivotal. I'm a little surprised, just general trajectory of the market. Thought we might close out the week and the quarter on some strength. But we do, I guess, not the end of the week, but the end of the quarter. But Dow futures, S&P futures, NASDAQ futures all down right at 1%. So we'll keep an eye on it. We'll be back. Ben's doing the call tomorrow. Solo call still at 8:30. Might be doing it from his house. Got a couple folks that are going to be out, Ben included. So look forward to that solo show, and we'll talk to you then.